Right, let's now move on. So the next part of my production cost statement will be my other indirect expenses relating to the factory, which we call factory overheads. Okay, so factory overheads, they also want me to complete the note. So let's do that. Let's complete the note. And there we go. There's our note, factory overhead cost. So we're going to start off with depreciation since they filled it in for us already. So let's start with depreciation, and obviously we're going back to our info. Okay, so let's quickly find the information regarding depreciation. There we go. Right, depreciation on factory plant and equipment is calculated at 15% per annum on the diminishing balance method. Take into account that new equipment with a cost price of $24,000 was purchased on the 1st of November 2018. This purchase was recorded. Okay, right, so very, very important, guys. If you look at the information given, there is my factory plant and equipment cost, $900,000. Obviously, there's my accumulated depreciation from previous financial years. But more importantly, this amount of $900,000, I'm just going to write it here since we have a bit of space. So this amount of $900,000 includes the new equipment that we bought during this financial year, as well as my old plant and equipment. Now remember, you've got to split this into new and old and then do your depreciation calculation. Okay, so once again, I'm just going to read the adjustment, make sure that you understand. So I'm told depreciation is calculated at 15% per annum. We know this. Take into account that new equipment with a cost price of $24,000 was purchased on the 1st of November. This was recorded. Okay, so let's now split this. The new equipment is obviously $24,000, and my old equipment would be the total $900,000 minus $24,000. Okay, and that gives me an amount of $876,000. $876,000. So let's calculate depreciation on new first. So remember, $24,000 is my cost. Obviously, there's no accumulated depreciation to subtract because it is new. So I'm going to multiply this by the rate, which is 15%. And multiply it by the number of months that this asset was owned by the business. So remember, your financial year ends on the 28th of Feb 2019, and this equipment was purchased on the 1st of November. So I've owned this for the month of November, December, January, and February. So I'm going to depreciate it for 1, 2, 3, 4 months. So times 4 over 12. 4 over 12, and that gives me a depreciation amount of $24,000. Right, you guys work with me. Times 15% times 4 divided by 12, and that gives me an amount of 1,200. Okay. Right, new calculated. Now let's look at old. So my old plant and equipment, the cost, an amount of $876,000. Don't forget, you've got a minus accumulated depreciation. So there's that accumulated depreciation amount, $180,000. Okay, and then I multiply it by 15%. For the entire year, 12 over 12, which cancels out. So my depreciation on old equipment, $876,000, less my accumulated depreciation of $180,000, right, times 15%, and that gives us, oh, made a mistake there. Let's just quickly clear that and let's start over. So $876,000 Okay, guys, as you can see, the weather's probably getting to me. So 876,000, right, minus 180,000. Okay, right, and now let's times that by 15%, and that gives us an amount of 104,400. So 104,400. Okay, so my total depreciation, remember, would be old plus new. So I just want to show that on the answer sheet now. Okay, so remember 1,200 plus the amount of 104,400, and that should give me a total depreciation amount of, so plus 1,200, an amount of 105,600. So 105,600. Okay, right, let's move on. Our next expense, insurance. So once again, we've got to go back to our information. So how much of insurance did we pay for the factory? So let's find that information. There we go. The insurance expense paid during the year amounted to 9,760 Rand. At the end of the year, there was an additional amount of 5,440 Rand still owing. The insurance is distributed in the ratio of 6:3:1 for the factory, the office, and the sales department respectively. So once again, I'm only interested in the factory. Remember that. Right, so how do I deal with this particular adjustment? And once again, guys, this is where we often find errors. So I'm going to start off with the insurance expense for the year, 9,760, and I first need to take into account the year-end adjustment. I'm going to say that again. I'm going to first take into account the year-end adjustment. In other words, the additional amount that was still owing, not yet paid. So obviously, as accounting students, you know that this is accrued expense. So at the end of the financial year, any accrued expense needs to be added to your actual expense. So that amount of 5,440 now needs to be included. So I'm going to add 5,440. And once I've added the accrued expense, I am now going to apportion 6/10. Where am I getting the 10 from? 6 plus 3 plus 1, so 10. Remember, the insurance is 6/10 for the factory. I hope I'm saying that right, 6/10 for the factory. So what have I done? I'm adding accrued expense and then multiplying this by 6/10. Not the other way around, guys. Always take into account the year-end adjustment first. So let's write that down in our answer book. Okay, let's quickly go there. So insurance, we're starting off with 9,760. We're going to first add the accrued expense, 5,440, close brackets, and then multiply by 6/10, and that should give us an answer or an amount of, so let's quickly do that, 9,760 plus my accrued expense, 5,440, okay, times that by 6 divided by 10, and the insurance portion of the expense, 9,120. Okay, right, take the year-end adjustment into account first. Right, let's move on. The next expense, water and electricity for the factory. So once again, we've got to go back to our information, right, and let's quickly find water and electricity. There we go. So an amount of 12,340 Rand was paid in total for water and electricity. 70% of this expense is allocated to the factory. I'm not worried about the admin department. I am not worried about the sales and distribution department. Okay, so I'm only interested in the expense for the factory. So remember, all I'm doing 12,340 times 70%. There's no year-end adjustment for me to consider. So let's go to our answer sheet, water and electricity for the factory. So the total amount, 12,340 times 70%. Let's get the calculator out again. Okay, you guys probably already calculated this. 12,340 times 70%, and that gives me an amount of 8,638. So 8,638. So as you can see, not difficult, mind setters. Right, let's move on now to rent expense. Okay, so once again, rent expense for the factory. I'm going to keep on saying that, for the factory. Right, so rent expense, there we go. So rent expense for the year totaled 104,400. This is allocated on floor space used. The factory uses 860 square meters. Admin department 60 square meters, and selling and distribution uses 80 square meters. So the total square meter of the premises, let's do that calculation quickly. So we've got 860, right, plus the admin department is 60 square meters, and then the warehouse or the selling and distribution department is 80 square meters. So the total floor space is 1,000 square meters. And remember, I'm only interested in the actual factory. So my calculation, guys, 104,400. There's no year-end adjustment to worry about, times 860 divided by 1,000. No need to simplify because you're going to get the same answer in any case. Okay, right, so let's put that into our answer sheet. Right, so my rent expense 104,400 times 860 divided by 1,000. Okay, so let's do that calculation. Right, guys, as you can see, it's not difficult. This is one section where you can really do well. Right, times 860 divided by 1,000. Okay, and that gives us an amount of 89,784. So 89,784. Okay, right, we've got just under 12 minutes left, so I'm going to try and do as many more calculations as I can. Let's see whether we can wrap this up in 12 minutes. We should be able to. So the next factory overhead, so obviously I've dealt with raw materials, I've dealt with depreciation, right? I've dealt with salary and wages, but not all of it. So let's start off now with indirect materials. Okay, so indirect materials, remember guys, the focus again is on how much of indirect materials did you use. Now I'm going to give you a very simple formula, and if you use this formula in your test or your exams, you will definitely get 4 marks for this particular calculation. So how do I calculate indirect materials used? I start off with opening stock of indirect materials. I will then add any purchases of indirect materials. If I come across returns, I must minus any returns. And then finally, minus my closing stock. That will then give me the indirect materials that was used for the financial year. So let's start off with opening stock. And if we go to the beginning of the info, consumables on hand, indirect materials, an amount of 2,400. So my opening stock is 2,400 plus purchases. So indirect material purchased during the year amounted to 11,200. So I'm going to simply add the 11,200. There's my second mark. Are there any returns? There isn't any. We would have come across returns immediately on the next line. So there's no returns. So what is my closing stock at the end of the year? So if I go down to the information, right, consumables on hand, indirect materials at the end of the year, 4,870. So all I'm doing now is I'm subtracting that amount of 4,870, and that now will give you how much you ended up using, and that is your expense. Okay, so I just want to write this in my answer sheet. Okay, I know I'm repeating myself, but guys, these calculations are so important. So indirect materials, right, in brackets, I'm just showing my calculation here. Opening balance plus purchases minus closing balance. Okay, and for this particular financial year, we ended up using an amount of 2,400 plus 11,200 minus 4,870, and that gives us an amount of 8,730. So 8,730, and again I'm reminding you guys, this is what we ended up using. Okay, often we find students tend to flip them around. So remember, closing balance, what I used, not the other way around. Right, indirect materials sorted. Let's now look at indirect labor. So here we're referring to the factory supervisor. Remember, the factory supervisor, he's still part of the factory, but he obviously doesn't physically make the product. He is considered as an indirect cost. So indirect labor, let's go back to our salary and wages information. Okay, there we go. So we've got the factory supervisor's salary is 3,200 Rand per month, and remember, he will also get that additional contribution of 1%. So let's calculate his salary, 3,200 per month. So all I'm doing is multiplying that by 12. So 3,200, okay, times that by 12. And that should give us an amount of, okay, 3,200 times 12, okay, and I'm getting a total of 38,400. So you can either show it here, guys, 38,400, or you can show the additional contribution on a separate line, because they are giving us one additional line, but let's show it on the same line. So remember, your additional contribution is that 1% UIF. So 38,400 times 1%, and it should be 384. So plus 384, and my indirect expense, so plus 38,400, my indirect labor expense 38,784. Okay, I think that covers all our factory overhead costs. I'm just going to quickly make sure that I didn't leave anything out, and all we've got to do now is total. That's basically it. Okay, so I dealt with this bit. I've obviously dealt with indirect labor a few seconds ago. Okay, UIF is sorted, insurance is sorted, water and electricity, okay, rent sorted. This is just additional information that I actually don't need. So I've obviously taken into account all my adjustments. Okay, right, factory overhead cost, if you add up, it should give you this total, but in any case, it doesn't really matter. And remember, this amount is what we're now taking through to our production cost statement. So let's do that, and we should have time now to wrap this up. There's about 6 minutes left. So factory overheads, 260,656. Okay, total cost of production. So remember, your total cost of production will be direct material plus direct labor plus factory overheads, or prime cost plus factory overheads. Doesn't really matter which method you choose. Okay, oh, now this calculator is not being too nice. Let's just move this. Okay, there we go. So 980,000. Okay, 980,440. Oh dear. Guys, as you can see, I'm not able to use the calculator at the moment, so you guys must just forgive me. 980,440 plus 260. Okay, 656. And that gives us a total of 1241, okay, 096. So let's fill that in, 1241, 096. So that is my total cost of production. Right, almost done, guys. So on the next line, my work in progress at the beginning of the year. Okay, so if we go to work in progress at the beginning of the financial year, there we go, my work in progress, an amount of 44,000. So I simply fill that in. Work in progress at the beginning of the year, 44,000. And then on the last line, or the second last line, work in progress at the end of the year. Okay, so back to my information, and at the bottom, that is where it should give me my balances at the end of the year. So work in progress at the end of the year, 34,000. Okay, so let's fill that in. So remember, work in progress at the end of the year is always in brackets, an amount of 34,000. Right, so let's get the calculator out. We're almost done with this question. So I'm adding 44,000, okay, and that gives me an amount of 128,096. So 128, let's get that out again, 1285096. Okay, and then all that's left is minus work in progress at the end of the year, 34,000. And that should give me my cost of production, an amount of 1,251,096 rand. So let's fill that in, 1,251,096 rand. Sure. Done, guys. Done with the entire question. There's about 2 minutes left. And we did have a question earlier on from one of our mindsetters asking about water and electricity. And I really liked this particular question. I can't remember the mindsetter's name, but she or he basically asked, water and electricity, why is water and electricity regarded as a fixed cost? Because surely the more you use, the more you produce rather, the more you manufacture, the more electricity you are using. So surely it cannot be a fixed cost. Now you are absolutely correct. Water and electricity is not a fixed cost. It's what we call a semi-fixed, semi-variable cost. But because your syllabus, we're trying to kind of simplify it, we therefore allocate, or not allocate rather, we therefore have your fixed cost and your variable cost. So in terms of factory overheads is regarded as a fixed cost regardless of the number of units produced. And obviously water and electricity falls under factory overheads, hence it is a fixed cost. But you are absolutely correct when you are questioning your teacher and saying, hang on, but surely the more we manufacture, the higher our water and electricity account will be. So as I mentioned, that's regarded what we call a semi-fixed cost. It does change, it doesn't remain constant. But for break-even calculations, please remember water and electricity should be a fixed cost. Okay, Right, so under a minute left, guys. I think we did quite a bit in today's lesson. What should you take from this lesson? Know your production cost statement, know your various calculations. Please remember, year-end adjustments, always take into account the year-end adjustment first before you allocate the expense to factory, the office, sales and distribution. Something else that is very, very important that we didn't cover, break even. Make sure you know how to calculate break even point.